A timeline for tax reform. House Republicans are expected to shed more light on their proposal next week. Speaker Paul Ryan says that they plan to release an outline on the legislation as early as Monday. I spoke about that yesterday with House Ways and Means Committee Chairman Kevin Brady on Sunday Morning Futures.
We are unified around a very strong middle class tax cuts. I want to lower the rates at every level so people can keep more of what they earn and we can grow the economy. I just honestly believe Washington takes too much of what people earn, and frankly, they also waste too much of what they take while they've got it. And so I think for us to grow this economy, drive a major middle class tax cut, and really create jobs in a way we've not seen a long way, let's try to lower those rates, create that growth at every level.
Joining me right now is Jay Jacobs, Global X Funds Vice President, Head of Research at Global X. Jay, good to see you. Thanks so much for joining us.
Thank you.
You say that, obviously, Global X is an ETF firm. You say that you're not really seeing a big expectation in terms of tax reform based on ETFs.
That's what we're seeing right now. I mean, you would expect some of those higher tax bracket companies to really start to reflect, some sort of major rally if we were expecting tax reform to pass. It hasn't really separated from the market, though. We're just seeing kind of general positive markets across sectors, meaning, it's just not being priced into things like consumer discretionary, which we would think would benefit very well.
So where are you seeing most of the flows right now? In what kind of ETFs?
Well, we're seeing a lot of flows into thematic ETFs right now, specifically technology-related ETFs. Our lithium and battery technology fund has quadrupled this year. As people are really kind of looking at the next decade and trying to figure out where's growth going to be coming from. We have high valuations in the U.S. right now. We have kind of low GDP growth. So future growth is really something that people are concerned about.
Our firm owns some of the lithium ETF you guys put together, and I think it's a great way for individual investors to look and say, I don't necessarily want to own Tesla because for whatever reason, the valuation possibly, but I do want to own the shift from regular cars that we have now to battery-operated cars in the future. And this is a great way you guys put together something. So that theme is a way, and I think the assets under management of the fund have really taken off in the last year, right?
Well, we've seen a couple of trends that are really starting to take off for electric vehicles. If you go back a few years, this was really just kind of like a affluent, early adopter kind of thing with Tesla, right? The people who had a lot of money thought they were cool, but it wasn't really a mass market kind of product yet. What's starting to change is battery costs have fallen in half in the last 3 years, and regulators across the world are starting to make electric vehicles a standard. In 2030, 2040, you have countries like China, the UK, France, India, Norway that are banning combustion engines. So you have these kind of two fronts that are really starting to make electric vehicles hit an inflection point.
One thing, though, about tax reform is anything that happens is going to be gravy for these markets. And you can disagree with me if you want to, but you have such terrific fundamentals globally at this point. Every single of the 45 developed nations in this world, every single one of those has an economy that's growing this year. And I think 33% of them have an economy that's growing even faster than they were last year. It's the first time you've had that synchronized global growth in a decade.
So the fundamental backdrop.
It's really incredible.
Completely agree with you. Earnings are supporting the market up here.
Yeah.
So if we do get some sort of a tax reform, I also believe that would be a push. I think you got that from me, actually.
Yeah, well,
let me ask you about that.
No, it's true. A lot of people have been saying that it's just sort of the icing on the cake.
It's 6:36. I can't insult you yet. I cannot insult you yet.
So let me ask you about the tax reform. We just heard Kevin Brady talking about middle-class tax cuts, which of course are popular with voters, and I think certainly long overdue. But does that really actually help in terms of growth? There's debate that the George Bush tax cuts didn't actually help grow the economy. Where you want to see those tax cuts is when it comes to corporate tax cuts.
I think it really depends what happens with those tax cuts, right? If you cut for the middle class, it's probably going to boost consumption because you suddenly have more money in people's pockets to buy things.
But what we found with the Bush tax cuts is that actually people use them to pay down their debt.
Well, debt can hurt consumption over the long run, right? Because people, sort of get in that debt spiral and they start cutting back on their spending. So maybe it doesn't have an immediate impact, but over the long run, that can kind of spur, more consumption in the future. So,
who's your typical investor right now? We want to talk about the new generation of investors out there, the millennials, what millennials are doing. This is going to be an important segment of the market for financial services.
Yeah.
I don't know. Do they have money right now, or do you target them to hope to get some of their flows of money over the years?
So in terms of investable assets, millennials are pretty small right now. But really you have to look forward to the future and see how much money they're going to start to control. So in 2025, income is going to go from $2 trillion to $8 trillion for millennials.
Wow.
They're going to inherit $30 trillion from the baby boomers. So most millennials are pretty young, pretty early in their career, but a lot of money is going to start being funneled toward this generation. And they're a very unique consumer in how they spend that money. They spend it a lot on technology, a lot on health and wellness, a lot on experiences rather than luxury goods. So we see that a lot of firms are trying to reorient how they're going to, really cater to millennials rather than the baby boomers, which has been their cash cow for the last few years.
And I think one thing, millennials also are risk adverse, at least at this point in time. So they'll invest in something that they understand, like lithium batteries or electric cars, but they don't necessarily want to take on a big risk for a big reward. They want to keep what they have.
Well, I would say lithium batteries is a big risk for a big reward. I mean, I don't know.
We see it as a very tangible
That's a trend,
investment.
right?
No, I don't think it's a trend at all. I think that we are going to have more electric cars on the road than regular cars in the future, right? I think that's kind of countries have already put laws into effect.
But we have been expecting that for a long time, and it hasn't gained traction yet.
Well, so let me just say,
True.
OPEC, they should be kind of the least for electric vehicles. They just revised their estimates by 5 times more electric vehicles coming on the road. So even the people who you'd think would be the biggest detractors of electric vehicles are saying this is happening.
Good stuff. Jay, great to see you.
Thank you.
Thank you so much. Jay Jacobs joining us there, Global X Funds.